So let's talk about this regulation of Bitcoin. We've got the CME, we got the CBOE now trading in futures. How much hydraulic pressure does that create actually on things like ETFs and SEC regulation?
You know, look, David, I think from a PR perspective, there will be a lot of pressure brought to bear because of the CBOE and the CME futures getting up and running. You know, we've already seen the registration of, or re-registration, I would say, of ETFs at the SEC holding these futures contracts. But, you know, truth be told, the substance of some of the concerns that the SEC had will remain. And I don't expect this to be an area in which the SEC moves precipitously just because you have some futures trading.
In other words, Dan, we may not see a Bitcoin ETF as soon as next year simply because there are futures contracts that are trading.
That's exactly right, Lisa. I mean, look, I mean, it's great to have a futures contract. There's, I mean, the margin level, I was astonished, I think was 47% on the CBOE. Which is extremely high in the futures markets. And it's great to have good margin. It's great to have that liquidity and transparency. But the truth is, we're still talking at the bottom of the analysis about a product that, you know, with Bitcoin, that's unregulated and has some features and characteristics that are still unknown to investors as well as regulators. Although,
Dan, the SEC has shown more willingness to approve ETFs of other sorts, whether they're opaque or less transparent, whether they're actively managed. Smart beta certainly is catching on. Do you expect them to sort of continue their path of loosening up on those levels, or do you think that they're doing it in a disciplined way?
Look, Lisa, honestly, the SEC, and I'm you know, really not pleased with the pace at which ETF approvals have been happening for the last 10 years. We were on a track to really bringing great new innovative products to market, and then right after the financial crisis, the door was shut. Now, in part, that was because you had market participants throwing product out there that was very harmful to investors, including retail investors. But the shutdown of the ETF approval process was not a good thing. I applaud the Commission for getting back at it, and you're right, they're bringing new ETF approvals at a pretty fast pace. But again, to contrast it with Bitcoin, you're talking about ETFs holding assets that are more well-known, even if they're somewhat esoteric compared to equity securities, they're more well-known than Bitcoin.
Well, well-known is one way to put it, Dan. That they exist maybe a different way. I mean, one of the things that really puzzles me is I can understand how the SEC can regulate how you trade in something, but how do you trade in something where ultimately there's no asset there to check out? There's no work you can do to figure out exactly what it's worth. I mean, no matter how speculative, other things actually are assets you can, at least in theory, check out.
That's exactly right, David. And if you think about just the whole theory of SEC regulation when it comes to these types of products and these types of offerings, it's all about disclosure and transparency. It's ensuring that investors have the information that they need to make smart investment choices. And with this type of product, it's just very hard. And so I'm not one to advocate regulation. Anyone who knows my body of work when I was a commissioner knows that I'm a free market guy. But I do think that the Commission's being appropriately cautious here. And I can tell you, when I was on the Commission, there was a lot of pressure being brought from a lot of corners for us to regulate Bitcoin qua Bitcoin. And I got to tell you, the staff of the SEC did a tremendous job meeting with market participants, meeting with the Commission, meeting with other interested parties, and making a recommendation to us that, you know, at least at this time, at that time, it wasn't appropriate to regulate Bitcoin. But that it'll be an evolving analysis, I think.
So Bitcoin is one thing, blockchain is another. And Dan, I know you've spent a lot of time focused on market structure. You also, as an investor, have a stake, or you're a director on a blockchain company's board. So can you give us a sense of where you see, what role you see blockchain playing in future market structure?
Oh, Lisa, I'm so glad you asked me, because I really, beyond just being a director at Symbiont, I just, as a policymaker or former policymaker, believe that blockchain, it will be for the securities markets the most disruptive, beneficial technology that's occurred in decades. I think it's going to be really transformative in clearance and settlement, corporate actions across the board. And you know, I think it's actually an area where I wish the government had done a little more to accommodate this type of technology under 80-year-old plus regulations. I think they need to get moving on this.
So Dan, broaden it out just a little bit with respect to blockchain. There are a lot of people out there that are afraid of missing out when it comes to Bitcoin. What are the smart ways for somebody to participate in the blockchain, to invest in blockchain without buying Bitcoin? Because to date, really, it's been you got to buy Bitcoin.
Yeah, and unfortunately, one of the things that's happening, David, it's a great question. Folks are looking for these opportunities, and what they're seeing are these ICOs being offered. Let's take an investment in a blockchain-based company. Let's buy some tokens from them. And what we're seeing is, and it was mentioned in an earlier segment, a lot of fraud. Tons of fraud. I mean, it's reminiscent of the sort of the Wolf of Wall Street pump and dump schemes. And, that's marring, I believe, what are otherwise really good potential opportunities. There are good blockchain companies in this space. Unfortunately, right now, most of them, like the one I'm with at Symbiont, are private for now, so they're harder to invest in. But I think the opportunities are going to increase exponentially and soon, whether through direct equity offerings, private investments, or maybe pooled investment vehicles.
Dan, can you give us one example of how you see blockchain transforming an aspect of financial markets?
Yeah, look, Lisa, I mean, the clearest one to me is the clearance and settlement process. You saw last year, or earlier this year, I guess, the SEC, when Mike Pivovar was chairman, and Commissioner Stein, together they moved the settlement cycle from T3 to T2. And this was such a massive change in the industry. So now you have a 2-day settlement cycle on equity securities. Well, guess what? With blockchain, this would be instantaneous. Yeah. You wouldn't have this process. And when you have smart contract technology on top of the blockchain, you wouldn't have just the clearance and settlement. You could build in all of the corporate actions and everything else, like prospectus delivery and the like. But unfortunately, as you know, there are a lot of entrenched interest in that space, and they're going to have to be dealt with as we move this technology into that space.